Good evening, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hopefully you guys had a very nice week in the markets and wishing you all a very nice upcoming weekend as well. And in today's action, guys, well, unfortunately, we had a bit of a pullback day. Most of your major sectors ending in the red. And of course, that was due to one key piece of news that came out late last night, which was the fact that Trump was announcing 35% tariffs on Canada starting August the 1st. Now, we know that's very significant because Canada is the largest trading partner for the United States. So, of course, the markets did react quite negatively to that piece of news. Additionally, what was said last night was the fact that Trump was saying that there would be blanket tariffs of 15 to 20% on most trade partners, which is up from the current 10%, which is the quote-unquote tariff pause effective rate. Now, that is significant as well because we know earlier on in the week, Trump was sending out a bunch of letters to various nations, 21 letters to be specific, in which he announced new effective tariff rates that would be starting on August the 1st. So suffice to say, if you did not get a letter, most likely your tariff rate will be between 15 to 20% starting on August the 1st. And of course, the market's reacting quite negatively to that news overall. So in today's video, guys, we're going to take a look at a few things together. Number one, we have to go through our technical analysis of all our major indexes. How is the sector rotation shaping up? Are the markets still healthy, or are the bulls maybe getting a little bit tired here at the all-time highs as we move into a very busy earnings season, which for the most part starts next week with a ton of companies, financials, some semiconductors, ASML, TSMC, and even Netflix is reporting next week. So how are we shaping up into a very busy next week? We'll take a look at that sector rotation. Thereafter, we'll take a look at our big tech name list down here, and we'll do the same analysis. Which companies are currently set up nicely for some swing trades or for some long-term positions? Thereafter, we'll go through our biggest gainers and losers of the week. Many companies, again today, guys, were down 4, 5, 6, 7, 8%. So we'll go through a few of these and see if we can derive any trade opportunities and do the same thing on some of the companies that benefited from the most gains today to the upside, of course. And to wrap it all off, I'll take you guys through my portfolio, show you guys all the positions and some of the trades that I was able to make today. Overall, it was a very good week for us in the markets. Many wins in terms of the wheel strategy. And we also had a few nice directional trades too. So with that being said, that's going to be the that's going to be what I have for you guys prepared in the video. So let's jump right into it, shall we? The SPY down about 0.35%, the Q's down about 0.23%, and you can tell from this divergence between the equal weighted S&P 500, which is the RSP, and the SPY. When there's such a big divergence, you know what happened. And of course, it was big tech trying its best to hold up the entire market. Amazon, Tesla, Google, NVIDIA, and Microsoft doing their part, but unfortunately Meta and Apple getting a bit left behind. Software, again, take a look at the software names in this list, and especially the SaaS companies down here. Another very bad day for them. Financials not doing much better. Healthcare not doing good either. And the bottom half of the market, which is somewhat interest rate sensitive, not doing well too. That, of course, is because the yields had a very large upswing today and have been pretty much in an upswing all throughout the week as more tariff rates were announced. It's very evident as to why, guys. More tariffs means possibly more inflation coming in the future and reduces possibilities of Fed rate cuts overall. And that is what was really impacting the interest rate sensitive segments of the market today. Taking a look at your one-day relative performance, only energy and consumer cyclicals were able to etch out some gains. Everything else, however, to the downside, led by healthcare, financials, and technology, your worst performers. On the 1 week relative, you can see it was a very mixed market overall this week with all the tariff announcements. Energy, industrials, utilities, basic materials were to the upside, and to the downside, sadly, consumer defensives, financials, communication services, which, let's be honest, is largely Google and Meta. And then, of course, we had technology. So still, the rotation, although today there was a lack of rotation overall in the markets, the rotation theme for this past week has been a pivot from some of the growth names over to some of the more value and defensive-oriented sectors of the market. So let's jump into the technicals right away, guys. We're going to start off with the SPY, of course. So the SPY not doing much of anything, right? Barely any brand new all-time highs this week, but also not breaching the daily higher lows. In the event we do get a breach, if the negative momentum continues into early next week, that would be your first daily downtrend in quite a long time, right? Since the end part of the month of June. So it's been almost a month that we haven't seen a daily downtrend. If you get a daily downtrend into early next week, guys, you'll understand that you're into a bit of weekly consolidation, and good thing the bulls are in full control right there. It's looking not too bad, all things considered, guys, right? Weekly uptrend, the higher lows are down here, 591, and you have a very nice area of support, which is your prior all-time highs. That area, once again, is about 609 down to 599 overall. A few of the things that you have to look out for in terms of next week, guys, of course, are going to be the very large earnings releases. And it all starts off with the banks on the Tuesday and then Wednesday sessions as well. JP Morgan, Citi, Wells Fargo, BlackRock, just to name a few on the Tuesday session. Wednesday, before the open, you get Bank of America, Goldman Sachs, Morgan Stanley, and a very large semiconductor player, ASML. On Thursday, another very large day, you get TSMC and Netflix, which are going to be some of the biggest releases of the week too. So even though the markets can be a little bit soft, of course, guys, if earnings for the banks and earnings for semiconductors and Netflix are good, well, maybe some of this weakness won't matter and the bulls will be able to recapture everything. You do need to understand, though, that the bulls are now a little bit extended. Oops, sorry, I moved the RSI. The RSI now, guys, is quite up, right? Or it's quite rich, trading rich right now in the markets. As a result, any negative earnings releases will obviously be a catalyst for a quick and fast sell-off, especially being in overbought conditions right now. So essentially, it is all reliant on earnings. We also have some pretty decent macro releases next week. Talking about on Tuesday, we are getting CPI. On Wednesday, we are getting PPI as well. Then on Thursday, you have some retail sales, and you wrap it all off on Friday with Michigan Consumer Sentiment Index. Now, I'm not too nervous about CPI or PPI. If we take a look at what's been happening over the course of the past month, let's just call it, right? Well, in the month of June, inflation was on a bit of an uptick, but you can see here, from the 1st of July to the point we are today, this is Trueflation, of course. They measure over 30 million different products at a single time, and it's updated daily. We've had the downswing, but for the month of June, you could see a little bit of an uptick overall. So please keep that in mind. I'm not necessarily nervous for CPI, but could we see some form of a surprise to the upside? We're already expected to have a hotter than expected read as opposed to last month's 2.4. We're now going to be coming in at 2.6. And you can see from this chart on Trueflation, that would obviously be reflected as well. However, in the early stages of July, we might be able to unwind that, of course, right? So keep that in mind. If inflation comes in a bit hotter, it may be a red day for the markets. But Tuesday's a very busy day, guys. You have that, but you also have all the bank earnings. So if banks are very positive and inflation is bad, it might just counterbalance itself overall. So please keep that in mind, right? I'm ready either way, guys. Suffice to say, if we do get some declines into next week, it should be a buying the dip opportunity. We got some nice support down there, and we know that institutions do have the room. Here's your smart and dumb money confidence interval index. You can see here that retail is still fully holding on to their bags, being very confident in the markets, but institutions have been somewhat net sellers of the market and have been lacking confidence. Now, one misinterpretation of this chart is that some people might think that you need institutions for the markets to rally higher. That is actually not true. You can see from this period here, from August all the way through December, right? Confidence in terms of institutions and positioning was to the low end, but still the markets were able to rally in a very decent way. You can actually see that a few times where institutions sold off and were less confident in the markets there, and still we were able to maintain some of the highs. All you need to understand is that institutions right now are looking for the next positive catalyst to redeploy some of the capital that they've been taking profit on this overall bull run. They do not need a significant decline. This is confidence. All they need is more confidence in the near-term future. And one thing that can be providing that, of course, is the outlook from all the many different companies that we will be getting in the next 2 to 3 weeks. So keep that in mind. Moving on to the Qs right now. The Qs, 0.23% to the downside. Still no daily downtrend, though. Break of 550 and a close below, that would do it. That would be a daily downtrend. And then you would just be looking for a bit of weekly consolidation. Good thing for us, the bulls are in full control right now, and we're working with a lot of space, right? The higher lows for the weeklies are 524, and you do have a very nice prior all-time high resistance range, which will now be acting as support. So I would assume that any dips down below into this very solid area would be the next buying location for the bulls. And that's also where I'm looking to further position. I was able to wind down quite a few positions over the course of the week, and I do have a lot of buying power to go shopping in the event that next week is a bit of a pullback week for the markets overall. Moving on to financials right now, financials down 1.04, almost setting a daily downtrend. But of course, we know that the short-term price action doesn't really matter. Why? Well, very obviously, you got all the bank earnings coming into next Tuesday and Wednesday, and that is going to move the chart a lot more than short-term price action catalysts, right? Those earnings are going to be the big catalysts. So all we need to understand here is on the weekly chart. Who is in control of the weekly chart? It is very clearly your bulls. Your higher lows are set down here, 49.88, and you got a whole bunch of support to be working with here. So if bank earnings are bad, understand you have a lot of space and you are coming down into support. It may just be the next buying opportunity if you're looking to play some financials. Some that I'll be looking out for next week are, once again, Visa down here in the 335 location, and MasterCard again. If MasterCard benefits from a bit of a sell-off down here, 535 area is where I'd be looking to go long some of these names. And I'm also a big fan of accumulating some positions on Berkshire, as Berkshire is now coming down into prior resistance, which is now support. You also have the 50 weekly EMA, which is not a very small indicator, guys. In the context of a bull market, it's very rare that Berkshire pulls down into this indicator in the first place, but normally when it does, although it can breach a little bit lower sometimes, it's usually a decent place to be accumulating some longs. So keep that in mind. Also, I'll also be looking to play the banks on a pullback. There's some nice support areas below. Bank of America, if we drop 43 to 42, would not be such a bad opportunity. And JP Morgan, same concept down here, around the 260s, right? If for some much reason we have a big sell-off, the bulls will probably be able to find some decent support down there. So just keep all of that in mind. The banks are not my first choice. I'd rather play Visa, MasterCard, and Berkshire because I feel that the structure on the charts is a little bit better. But that's just me. Moving on to healthcare right now. Healthcare down 0.83%. Still tightening up here. No short-term trend direction on healthcare. The clearest time frame, in my opinion, is still the weekly. We're trying to go for the weekly uptrend, but we need a break and close above 137.57. Healthcare has been very weak as of lately. We are desperately trying to hold on to this 200 weekly EMA, which doesn't get tested that often. The last time was during COVID, and prior to that was in 2015. So normally it is a good buying opportunity, but we know this sector sometimes moves very slow. So similar to a company like Berkshire, if you're looking to play the index, you should be slowly accumulating positions here if you are looking for the eventual monthly upswing, taking a base of support down here. The bulls are building a new base using all these guys as well. It's the exact same level as we had back here. And eventually, right, when you tighten up enough, you can possibly get a very nice pop. Healthcare has really been lagging behind the market. And if tech and financials take a break, you will need the healthcare sector to come play ball to not result in some serious declines in the S&P. Moving on to semiconductors right now, actually flat on the day. Sadly, they were green, but they unwinded towards the end of the day. We have not lost any of the short-term timeframes, though. The bulls are still well in control of this daily uptrend right now. We know that semiconductors have been overbought for the better part of the last 2 to 3 weeks at this point, and they are constantly clipping into new all-time highs. So pay attention to this higher low right here, 279. In the event that, let's just say, okay, for next week, because the biggest catalysts, of course, are going to be ASML and TSMC for this chart. In the event that those earnings are not well received for the market for XYZ reason, and semiconductors start a bit of a consolidation move and go into a daily downtrend, you need to understand that it's fine because the bulls right now are quite extended on this weekly move, and we would just be looking for a higher low. The first area that you're going to be looking for is 276. If you lose that, then the logical place that we might pull back into is 260 down to 250. So please keep that in mind. Semiconductors are still the lead bulls in the market. And in my opinion, you will not get some significant consolidation on the SPY or the Qs until you lose your lead bull. So pay special attention to the daily uptrend on this one. We have not lost it in a very long time. If you do lose it, that is when I do feel that the consolidation phase for the SPY and the QQQ may just be a little bit more considerable. Moving on to the Russell right now, down 1.38%. Of course, that is due to yields. Growth stocks really don't like that rapid rise in yields. But that being said, the bulls are still in control right here. The higher lows are set at 218. So keep that in mind, right? Rejection from resistance, as we were pointing out in yesterday's video, 225 up to 230. If the event we lose this and we get the flush and the daily downtrend, understand the bulls are working with a lot of space on the most important weekly time frame right here, and the higher lows are all the way down there, 207.13. Bit of a weekly pullback would not be the worst. You got a lot of EMAs there, a lot of price action support. We will see how they react to it if they do come down there. Moving into our minor sectors right now, XLP. XLP continues, in my opinion, to be somewhat of a favorable trade into the second half of the year. Very nice support has been established right here between 80.75 and 79.7 overall. So accumulating some positions on some of your favorite names such as maybe Walmart coming down into support right here, names such as Costco, high quality names, right? Adding to some longer term positions if Costco continues its decline right there into 920 to 900. Not a bad proposition in my humble opinion. Or if you just want to play the entire XLP index, just notice, guys, we've been consolidating for the better part of a year with a bullish leaning bias leading into the end of the year, of course. So keep that in mind. It might just be a decent trade, although it does not move fast. It could be more something that's a bit more safe for some people out there, right? On to utilities right now. Utilities not doing too bad on the week. We've established a nice range of support down here, 80 down to roughly 79, and the bulls might just be looking to go for it, guys. Sideways accumulation. This is a weekly bull flag, and you might just be looking for that leg of expansion, so keep that in mind. Utilities, not the worst, especially since we know that there has been a significant rotation from growth to value over the course of the past 2 weeks. And lastly, real estate. Well, real estate was looking good, but unfortunately today got pulled back by that rise in yields. And we are also sideways accumulation bound right now. 41.5 down to about 39 is the massive range of accumulation. It was big resistance back here. It has been support for the better part of the last 6 to 7 months. So it might just be looking for an upswing. The only company that I invest in personally is Vici. Vici is looking very strong, guys, very strong. We saw yesterday from Delta Airlines that travel was still good. We heard from Booking Holdings last quarter that overall hotel bookings and flights were pretty good. And Vegas, all things considered, has been doing very well, guys. In terms of the casinos, the hotels over there, they have been reporting pretty good numbers over the past 2 quarters. So I do indeed like Vici overall, but special shout out to other corporations such as O. O has been consolidating for a very long time now. Not the worst buy if real estate is something that you want to do. And lastly, energy. Well, energy has been having a little bit of an upswing overall. Not looking too bad. Not one of my favorite sectors to play overall. They're still trying to recapture the resistance range that we're under right now. 90 essentially is going to be that high. So you'd like to see them break above and then use this as support overall if you're looking for kind of a, breakout retest swing trade type of thing right there now. So moving on to the VIX right now, the VIX is still low, 3.93% to the upside today, but still doing a whole lot of nothing, right? We are still looking for the next catalyst that is going to move the VIX in a significant fashion to the upside. And so far we have not gotten it, right? So down here, I still do believe it's a good time to be buying some options, some leap call options to be specific, but not on everything, right? Not on names that are just blasting through all-time highs. No, you still want to be looking for good risk-to-reward setups on some high-quality, high-conviction companies that have been left behind because the volatility is really, really, really low right now. And of course, if the VIX has an upswing and the markets have a bit of a decline, then you'll know that it's going to be a good environment to sell options. But when the VIX is low, you want to be a buyer of options. When the VIX is high, you want to be a seller of options. The dollar still not moving too much, little bit of an upswing this week with the overall tariffs, but we know the dollar has been net weak so far. Curious to see what the effect is going to be on earnings. As I've said in all the videos over the course of the week, guys, we now have currency tailwinds for all of the international companies, MasterCard, Visa, Amazon, Apple, basically anybody that sells things internationally, they will be able to benefit from a weaker dollar for an increase in their EPS. The reason why? Very logical, guys. If they make their money in euros or pounds or other foreign currencies, which have all been appreciating against the dollar in the most recent quarter, well, those companies will be able to bring those international revenues back to dollars and get more dollars, which could bolster their EPS and their US dollar free cash flow numbers as well. So there should be some currency tailwinds in the earnings. We'll be paying attention to that this earnings cycle. Moving on to the 10-year yields. Of course, we covered that early on in the video, but still, guys, yields still unable to embark on the actual downtrends. They've been very sticky. The 10 around 4.5 and the 20-year yield very sticky between about 4.8 and 5%. In my opinion, we will not have any considerable drops until the Fed actually starts its rate cutting path, which most people estimate will be in the month of September. So bonds, unfortunately, still remain very weak, still a very good accumulation zone, but you got to be a little bit patient on that. In terms of gold, gold was up 1% today. We were talking about the swing trade opportunity yesterday on the channel, and we did get it, guys. I actually did a bit of a swing trade on gold myself. You can see that trade right about there. I alerted my chat. 33.25 entry, and then your take profit was 33.65. Beautiful trade. It was a 3-to-1 risk to reward essentially, and we absolutely smashed it, right? So we were looking for essentially the daily upswing, right? So it was looking good. We had a daily downtrend here, engulfing move by the bulls, setting the higher lows into support, and we were looking for the upswing. Good thing yesterday, these short-term timeframes did show us that the trade was on, and now the bulls are moving into resistance. Sorry, let me just, make this chart a little bigger for you guys. So resistance stays put 33.80 down to about 33.47. So we will see if the bulls have it in them to actually mount above this resistance and open up another of my favorite swing trade opportunities, which is the infamous breakout, retest, and run. I'll be watching for a retest trade as part of my next trade. If we just unravel everything, well, of course, support below still stays put 33.10 to 32.61, and we may just tighten up this range between resistance and between support. Gold's been getting stuck there for the past roughly 3-4 weeks at this current stage. Moving on to Bitcoin right now. Bitcoin, brand new all-time highs. Friday. Now, of course, I'm filming this one a bit later at night, so this is the new candle, but very nice move on Bitcoin yesterday, 1.34% to the upside, reaching a high of 118.8. This was a very obvious and logical move in my opinion, guys. It was a very nice daily uptrend, and we were just looking for the breakout of the all-time highs. The time frame, which was the smoking gun in my opinion, was the weekly time frame. This was a very beautiful bull flag above prior resistance highs, now established as support. The bulls refused to give it back, and we know that July is traditionally a bullish month for equities, but also for Bitcoin overall. So we did have a bullish leaning bias. The weekly gave us that bias, seasonality gave us that bias, and the monthly uptrend also gave us that bias with the monthly candle close of the month of June. So I'm happy for you guys if you guys were able to buy the dip with us. I was talking about it many times on the channel, building some positions there and going for the breakout. Now we got the breakout, so now it just might be some time to take some profits. Next price targets have to be psychological round numbers, 120, 125. You guys know the drill. And in the event we pull back, well, there's a lot of space, guys, right? Anything above 107, just looking for a higher low. And of course, your closest support is going to be the area that we just broke out of, the prior all-time highs. Let's call it 112 down to roughly 109. Very nice move on Bitcoin, all things considered, right? That being said, that's everything for your overall market preview. Now let's dive into some big tech names, shall we? And we're going to start it off with good old Apple as usual. So Apple sadly down about 0.6% today, still struggling with the resistance highs, 221 down to about 211. Now, if Apple ever breaks to the downside as a result of just struggling with the resistance and the 200 EMA, well, just keep an eye on this range at this level right here, 207.79. Crack that to the downside, that is a daily downtrend. And unfortunately, Apple will just be coming down into a little bit of a weekly higher low hunt right there. The weekly time frame is looking not too bad. They've created a lot of space off of these lows, 195. If you get a pullback, in my opinion, it would be a decent opportunity to buy. We have some curling action of the weekly MACD after being negative. Essentially, guys, since the start of the year, right? Since January, Apple's just been caught in negative momentum, negative sentiment, but it is currently turning around. And as a result, I do believe that it could be an interesting play to be loading up back on some Apple in or around the lower $200 range. So we'll keep an eye on that coming into next week. Apple with earnings, of course, in about 3 weeks' time at the end of the month of July. And the expectation, or what we're going to be looking for earnings, guys, is going to be all about this. What is the continued tariff impact? Are they making further progress on their revenue growth, and especially any and all updates related to their AI rollout, which so far has been somewhat underwhelming? Moving on to AMD right now. AMD up 1.57%, closing the week very strong. AMD had a bit of a daily downtrend going there, but we knew that that was just very casual weekly consolidation. The weekly time frame for AMD holds the key in my humble opinion. It's a very gorgeous weekly uptrend. We almost came back down and back tested support perfectly, 132 down to 120. The EMAs are a little bit lower there as well. So in the event that the bulls cannot get it done and cannot breach resistance into next week, let's just say, once again, they are affected by negative momentum on ASML or TSMC when they release their earnings, and AMD gets dragged down in the mix. Well, of course, you got a lot of support down there, and I'm a big fan, very big fan of playing these AMD pullbacks. I'll be looking to sell some put options down there. And in terms of whether or not we're late for a fundamental thesis on AMD, I really don't think we're late at all, guys, right? At 140, the PEG ratio is still very manageable. The forward price to earnings is very manageable. However, the thesis is still fully intact for expansion of a few things, not only net margins, but also EPS over the next 2, 3, 4 years, and revenue as well. Look at this significant revenue uptick right here for the company. So although we're not buying it at the lows, that's not a problem, guys. We have to focus on what is the price now and does it still make sense? And in the context of that multi-year thesis, I still think it does represent a decent longer-term trade or longer-term buying opportunity. Moving on to Amazon right now. Amazon up 1.24%. Good thing, because without Amazon, Google, NVIDIA, and Tesla, right, the markets would have not been looking too good today at all. But Amazon creeping up a little bit higher. However, still stuck, guys, in the confines of resistance. 228 is going to be the resistance high. So one of two things is going to happen. This is a nice daily uptrend. Either we break above resistance, right, and try and then use it for a back test and run, similar to something exactly what happened back there. That would be a nice trade opportunity. Or in the event we flush, go below 218 and unwind this daily uptrend. Unfortunately, use resistance as a backtest there and plunge a little bit lower into a daily downtrend. That would just be weekly consolidation. That will be another buying opportunity. So there's two buying opportunities in my opinion, guys, because buying a resistance breakout is not in my wheelhouse. I know some people like doing it. I'm a big fan of confirmation, right? Give me the confirmation you can break the level and then backtest it. Then I can use it as support and establish a stop loss below it. Or give me a weekly higher low pullback so I can establish a stop loss below the recent weekly higher low, which is 207.39. I will be a big fan of playing Amazon on pullback, either for acquiring more long-term shares or for selling put options in the 210 or lower than 210 region. Fundamentals for Amazon still remain very good, and the fundamental thesis for Amazon is still very, very well intact, guys. Look at the EPS expansion over the next 4 years. It's going to be getting very juicy for Amazon. And look at the revenue expansion. By 2028, we're almost expecting $1 trillion in revenue across their various lines of businesses. Moving on to Google right now. Google with a very good day, 1.5% to the upside. Almost closing above the highs here, guys, but not quite. Very close, but not quite. I'm not going to give it to them, guys. That's too close for me, right? Trying to go for the daily uptrend swing. One more day will definitely do it, but sadly for Google, we're coming into resistance very quickly, yeah? So 184 up to 190 is going to be the resistance range that you guys need to pay attention to. This was prior support back here, prior resistance back here, so that is the closest and most important level that we have. That being said, the weekly bulls are not looking too bad at all. So in the event that we come into resistance here next week and reject, understand we got a lot of space. Anything above 163 is just looking for a higher low on the weekly. And maybe if we can't get it done in one clean shot, maybe we have to do the good old two-step process of trying to smash through that resistance. In terms of fundamentals, you guys know what I've been saying for a long time now. Sure, there is some risk on the company, but that's why all the analysis must be done as a function of risk to reward. There is some very decent reward to be had here on Google if you're willing to take the risk. The forward price to earnings is still very attractive. And in terms of the longer term fundamentals, Google has fantastic net margins, huge amounts of buybacks that will be coming in the next few quarters and next few years. And the EPS expansion of the company, no problems there. And the expansion of the revenue as well, no problems there as well. So Google is looking quite good, all things considered. Moving on to Meta right now. Meta down 1.34%, sadly. Almost establishing the daily downtrend, not quite closing below 712. So they're trying their best to save it. We almost came down and clipped into the most recent level of support that we have. That being said, if Meta goes for a bit more, just understand that this overall level right there is the next area of price action that could provide some support, and that is 705 down to 683. It's not a very strong level. It's a temporary level. It's definitely not as strong as something like this, right? Definitely not as strong, but it's the closest one that we do have. In terms of the weekly timeframes as well, your weekly higher lows are set a little bit at the bottom of that range I was just talking about, 680, right? So we're just in weekly consolidation for Meta right now. They have to protect this line in the sand right there. All things considered, it is still looking like a very healthy weekly uptrend and could be due for a little bit of a swing trade, right? If you pull back into here and get some short-term oversold conditions like we've been seeing, hourly oversold, maybe cascading into 4-hour oversold. Then if you're looking for some reversals, the stop loss could go below this area and you would be targeting swing trade longs with the stop below there and possibly a take profit around the all-time highs. We don't have that much room before earnings, about 3 weeks worth of time, but there is a little bit of time for a swing trade coming into the earnings cycle overall. So please keep that in mind. Moving on to Microsoft right now. Microsoft up 0.37% today. Hesitating around the highs, of course, still above the $500 psychological mark, but the bulls, guys, we've been daily overbought conditions now since the early portion of May, a full 2 months of daily overbought conditions. And I know things can last, but they cannot last forever. In my opinion, the earnings cycle for big tech will be absolutely key. Microsoft has ran a ton this entire quarter, guys. This is a historic run from Microsoft, right? In just the past quarter, the stock is up 41%. You would be hard-pressed to find that size and speed of a rally anywhere in Microsoft's history. So this quarter is going to be a show me quarter. Can they show good enough numbers to warrant the speed and size of this move? Even if their numbers are good, guys, we've seen it before, right? To where, companies like CrowdStrike, other companies have shown very good numbers. Even a company like Micron's earnings here were fantastic. Still, the stock pulled back thereafter. Why? Because the run was so significant. So there's a few companies that might be subject to that. Microsoft is definitely going to be one. Netflix is going to be another one. We're going to talk about that in just a minute's worth of time. But the bulls are still in control, guys, right? It's a very clear daily uptrend. The higher lows are very close right now, 493. If you breach it to the downside, you open up the door for a daily downtrend. And if you lose the higher lows, you will probably also lose the 12 EMA. And the 12 EMA has been something that the bulls have held this entire time. If you do see the daily downtrend, guys, well, is it time to sell all our Microsoft? No, guys. The bulls are in full control of this chart. Weekly would just be looking for a higher low. The area that makes the most sense for a pullback would be the 12 EMA, coupled with these prior highs right there. That is 467. And in the event it gets a little bit more aggressive in terms of a sell-off, well, the cleanest area, the largest area, in my opinion, still stays put at about 460, down about 444. That would be a pretty big pullback on Microsoft. It doesn't happen all the time. Something big would have to happen in the markets, or their earnings would just have to be a bit underwhelming for us to warrant such a steep decline. So please keep that in mind. I'm not buying any more Microsoft up here. Been very vocal about that. It's at the top end of its valuation. I was a big fan of buying here and down here. Now I'm just holding what I have, but I'm not selling anything for sure. It's Microsoft at the end of the day, right? Moving on to Netflix right now. Netflix down another 0.44%. This is what I'm talking about, right? You grind the 12 EMA the whole time. You never lose the daily uptrend, and then you lose the daily uptrend and the 12 EMA. Well, you're going into weekly consolidation, right? And that is very obvious on the chart for Netflix right now. 1217 down to 1185 is the next support zone. However, they have earnings next Thursday. So the short-term price action probably won't matter. Why? Because Netflix, their expected move is about 7% up or down after earnings. 7% to the upside would put you right back to the all-time highs. 7% to the downside would crack that support and put you right around 1150. 1150 would just be an unwind here of your weekly time frame. The weekly higher lows are now being set at 1175. Keep that in mind. If you unwind this, well, you might just be looking for the higher time frame consolidation, which would be monthly consolidation. It's been an amazing quarter for Netflix so far, but we are extended from the 12 EMA. We are in monthly overbought conditions. I think their numbers will be good. But will they be good enough to justify this 40+% rally in 3 short months? I don't know. Guess we'll have to find out next week. I'm not positioning at all for Netflix for their earnings, but I will be a fan of playing the pullbacks if they do occur. Moving on to NVIDIA right now. NVIDIA up 0.5%, but the bulls also, showing some signs of getting a little bit tired right now. It's been a very beautiful move by NVIDIA, guys. We are now daily overbought conditions too. And keep in mind that the daily uptrend is still very well in motion. We got a lot of space here. 151.32 is the higher low. Any pullback looking for a higher low for further trend continuation. But similar to Microsoft and Netflix, guys, it's been like 10 weeks, 10, 12 weeks of upside. Nothing but upside in a row without much of any pullbacks whatsoever. Your weekly time frame is coming into overbought. I know NVIDIA is no stranger to overbought conditions. They can stay overbought for a while, but after about 10 weeks in a row, guys, NVIDIA's pulled these type of moves before, and that's usually where we have a little bit of a pullback phase on this company. So keep that in mind. I'm not saying it can't go higher. Of course, everything can go higher, guys, but is the risk to reward here worth it? Well, if your timeline is years, yes. But if you're short-term trading, you might want to be a little bit more cautious and a little bit more defensive on that positioning overall. So keep an eye out for it, right? It'll all be, in my opinion, guys, TSM and ASML, the earnings for next week will have a big impact on semiconductors overall. In the event it's red, you can expect a pullback on NVIDIA, and I'm a big fan of playing this pullback, guys, 150 to 145. If for every which reason we come down aggressively and I can find some short puts in this area, 150 to 145, I will be looking to write some options down there. I think it's the most logical area for the bulls to retrace into. The 12 EMA on the weekly is going to be curling up there as well. And you'll probably find a lot of buyers to kind of backstop some of the selling and might just be looking for another upswing after that. It would not look very awkward in my opinion, right? Moving on to Tesla right now. Tesla up 1.17%, trying to do its best to recover from the blows that it's been facing in the past few weeks. Now, not too bad. Coming out of support, 300 down to 259. The bulls doing a good job here, guys. Have to admit, right? Daily downtrend, nice, almost engulfing move. They've created a lot of space off the lows. So if they do have a bit of a retracement down, guys, they'll be looking for a higher low for possible daily uptrend reversal. That being said, the clearest time frame, in my opinion, is the weekly. This is somewhat of a tightening range. It's a range because we're trapped between overhead resistance, 340 to 360, and below support, 300 down to 260 overall. The one level that you want to pay attention to, guys, if we break to the downside, is 275. Break 275, it's a weekly downtrend, and you might just be looking for a little bit of monthly consolidation as well, which could bring you to the bottom end of the support range, talking about 260. Tesla has earnings, guys, coming up in the next few weeks, July 23rd to be specific. I'm not positioning for any Tesla swing trades leading into earnings. The key focus for Tesla this earnings season is going to be EPS and margins. Keep in mind, EPS and margins only. Why? Because they just lost the individual EV credits, $7,500 for a new EV purchase in the United States. They also just lost most of their regulatory credits that other companies are going to pay to them, which was a Biden-era law that Trump has since undone, right? Moving to Palantir right now. Palantir down 0.28%, not able to bring into the highs just yet. So I'll give you two possible scenarios for Palantir right now. One of which is just a full V-shape and a new all-time highs, break above the highs, breakout, retest, establish a new support line, and then possibly get the rally. That is scenario number one. Scenario number two is they fail the highs right here and start to roll over. Now, that scenario is one that I would be probably willing to play, especially considering the fact that a lot of growth stocks, guys, have been unwinding quickly in the past few days. If Palantir is the same and meets a little bit of an unwind situation here, I'll be looking to play down here. 125 to 120 is the decent pullback zone for me. In that case, you'd just be looking for a bit more weekly consolidation overall. Would not look too terrible for the markets. Palantir is very overvalued right now. It's just a fact. No matter which way you try to cut it, guys, it is overvalued. Whether you look at price to sales, PEG ratio, forward price to earnings, whether you use 25, 26, 20, 27, sales or earnings, it's overpriced via every single metric. And they will have to show very, very solid revenue growth come earnings time in August. But that is the area of pullback that I'd be personally looking to play on Palantir for a bit of a volatility swing trade overall. On to SOFI right now. SOFI up 1.1%. However, unwinded a bit in the later portion of the day. And the reason being, at 2 o'clock, something happened. We'll get into that at the end of the video. The biggest gainers of losers, it had to do with this. JP Morgan tells fintech firms to start paying for customer data. A lot of different fintech names, such as many of the ones that you see on this list right here, PayPal, Affirm, Square, they were down, but SOFI also got dragged down a little bit in the mix. Prior to that, they were doing very well, almost clipping into the $22 range. Now, suffice to say, guys, that it's been a beautiful move on SOFI, and I'm very happy as a SOFI shareholder, right? But you kind of got to see things for what they are. We are overbought on the RSI on the daily right now, about an 83. It's been a very beautiful upswing so far from the area that we tried to break through, 14 all the way here, guys, right? 55% in the last month. That is a huge move. Short squeeze, a lot of retail interest, a lot of YouTube videos, a lot of Reddit posts. That'll definitely do it. The next overhead area of resistance for SOFI stays put at 23 to 24 in the event that this is not a short-term local top. How do you know that the bulls are possibly done? You have to look at the 4-hour trend right now, guys. If you lose the 4-hour uptrend and lose the 4-hour 12 EMA, then you're probably going to start daily consolidation. But good thing for the bulls, they're working with a lot of space, right? Anything above 1733, looking for a higher low for possible further trend continuation. If I had any swing trades on that I'd established from here or here, I would be probably looking to take a bit of profit, right? If you're looking to play the swings, no problem at all. But as a long-term shareholder for shares that I acquired back here, well, some prior as well, but some a lot back here, I'm not selling a single share because I'm not trying to swing trade my long-term portfolio, right? But swing trading like call options and stuff like that, you may as well benefit from the size and scale of this move and take a little bit off the table. Not financial advice, just something that I personally would be doing in the same situation. That being said, the weekly chart is looking very strong. Any pullback right now, looking for a weekly higher low, 13, and the next relevant area would probably be down here, the top end of 18 to 17, of course. That being said, that's pretty much almost everything. Two last ones now, Uber and then TSM. So Uber down 1.05%, pulling back, not able to go for that $100 price target just yet. That being said, the bulls are still in control of this chart. Your daily higher lows are here, 90.5, just looking for a higher low. possibly for further trend continuation, right? So keep in mind is how we react to this area that we're coming up into, 93. If you just blast through it like it's not even there and engulf this entire daily move, well, maybe, just maybe, you might be looking for a daily downtrend, and then maybe, just maybe, that's the top of this weekly move, and you're looking for a weekly higher low. Good thing, though, the bulls are in full control. We have a beautiful weekly uptrend in motion right now, and any move lower looking for a higher low, anything above 82 looking for a higher low. If you get a quick and rapid pullback on some growth names, I'll be looking to sell some put options down here in the lower 80s. So it's just something that I keep on the watch list, right? I have a lot of long-term Uber shares that I acquired back here. Well, not only there, like I've been buying Uber for years, but I digress. The last time I was buying them was back here. I'll be looking to play the pullbacks at that point in time. I'm not selling any long-term shares here, but I'm also not buying anymore either because the valuation at about 95, it's not that it's expensive. It's just not quote unquote a good deal anymore. It can go higher, but I'm all about the risk to reward for the next 2, 3, 4 years when I look at revenue and EPS expansion growth rates. Moving on to TSM right now. TSM up 0.28%, but we know that probably doesn't matter. Why? Because they have earnings on Thursday, guys. The expected move on TSM is about 8%. So next week, they could fluctuate up or down a couple percentage points, but the earnings is going to be the big one for them, right? 8% to the upside would put this company, well, at 250, and an 8% pullback would put us right back into support, 211 down to 210. In the event they pull back, and TSM has pulled back even in the context of good earnings. This was one where earnings were fantastic in April, and they still pulled back about, a couple percentage points, right? They've had a few. This earnings release right here was a very good earnings release. They popped, and then they gave a lot of it back in January. So even though TSM can have a nice pop, it doesn't mean we just have to pop and just keep going, right? They can pop and then have a pullback, or if their numbers are not good enough for the markets, we could just pull back right away. I think their numbers, objectively speaking, will be fantastic. They have very good demand, they have very good net margins, and their growth profile for the next few years is very attractive, guys. Look at this EPS expansion and look at the revenue expansion as well. I think the numbers will be absolutely fantastic, right? But once again, we come into the problem of, can they justify this entire rally since last earnings? Can they justify a 56% increase in the last 3 months? The company is still fairly valued in around the 220, in my humble opinion. As a result, if the markets send this one down for no good reason, I'll cover it on the channel for you guys. I will be a buyer of TSM down here, 211 down to 210, both for some swing trades, but also maybe for some additional long-term portfolio trades as well. And with that, that concludes all of our stocks and sectors of the market today. Hopefully you guys enjoyed that section. Now let's jump into the biggest gainers and losers of the day. We're going to start it off with some of the biggest losers. Okay, we're going to start off with CoreWeave. CoreWeave down another 9%. Now, this is reminiscent of the sell-off that we had on Circle just a few short weeks ago when we clipped into highs, a lot of momentum, a lot of retail interest, and then we had a big unwind cycle. CoreWeave is going through the exact same thing, right? We have not really had a daily downtrend since the early portion of April. It's been up, 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 and up only. Now we have the daily downtrend, and now we have a bit of a weekly sell down. However, the bulls have a lot of space right here. If we put the fibs on this, guys, it was a huge move, right? So the expectation at the worst case scenario, in my opinion, would be a 110 retest of the 0.5 fib, or maybe the 618, which is in the high 90s. But beyond that, the sellers will probably run out of juice. I'm not saying it's going down there. I'm just giving you guys levels to base your trades off of overall. We are still not daily oversold conditions just yet. Circle did not achieve them either, I'll remind you, through this entire sell down. But one thing we did achieve on Circle prior was, right, we started to get very oversold on the short-term timeframes. Very, very, very oversold on the short-term. We're there as well. But I digress. I'll bring it back to the CoreWeave chart. CoreWeave is actually better than Circle in terms of just getting a sense of oversold conditions on the shorter time frames. The 4-hour time frame right now, the RSI is 17. That is the lowest RSI that we've ever had on CoreWeave. I know we don't have that much information because it's brand new, but it is a very, very deep sell-off. Just keep in mind, though, however, that even if we get a bounce from here, guys, the daily bears are still in control, right? The most recent lower high is here, 164.8. So if you want the bulls to regain control, you have to wait for the daily uptrends, right? Let the bulls tell you where the bottom is rather than trying to predict the bottoms. We're not in the game of predicting here, right? We react to the price action. So when you have the bounce, I'll remind you how it goes. When you get the daily bounce, which will start by getting a recapture of the hourly uptrend, number one. When you get that daily bounce, you measure the size of the bounce as it's happening. If the bulls can recap, let's say it stops here, right? if the bulls can recapture 50 or 618 percentage points of the move or the fibs, right, then you know that they have a very good chance of resetting the time frames overall. So keep that in mind. It's just like Circle, right? Circle, we waited for the bottom, then they got the bounce. This was a very nice 78% bounce right here. Then we're going to look for the higher low and possibly go for the daily uptrend shift. Only when you have a daily uptrend back can you say the daily bulls are back in control, and you can go for more momentum to the upside rather than trying to guess and predict things. The favorite way that I'm looking to play this is looking to play the volatility. Very good volatility on these options contracts. I will be a net seller of options, and every week I'll be looking to sell deep below the current price of the stock right now and just try to benefit from that volatility, which means that even if I get assigned, I know if I do get assigned, it'll probably be daily oversold conditions. It'll probably be deep 4-hour oversold conditions as well. And I'll be looking to pick up some shares as cheap as possible, but I like to sell puts on this stock right there. Same thing for Circle, right? Since we do not have a daily uptrend just yet, I'm not looking to put any bullish trades on, but what I will be doing is selling some put options as far as possible below the markets. Circle's giving some fantastic premium, as is CoreWeave, right? Let's just take a look at Circle right now. Circle for next Friday, if you want to look for the 0.5% rule, you can go all the way down here at 145 and get 75 cents. That's 0.5%, guys. 145 is all the way down here at the bottom end of this previous support range. And for 1 week, that would be a sell-off of roughly 22-23%. And then you'd be buying stock most likely at some short-term oversold 4-hour conditions as well. If not, you just get to collect the premium. So keep those things in mind when looking at some of these volatile plays. Soundhound, rejection from resistance right now, 1435 down to 1291. We might just be looking for a higher low, right? The bulls put in a huge move from here. You can see that on the daily. You can also see it on the weekly, right? We were trying to go for the weekly upswing, which we did, but I don't like the structure of this weekly candle. Maybe, if the volatility and decline continues, you might find me selling some put options down here, $9 to $8. Not my preferred stock, but I'll kind of explore it as it happens. PayPal. Now we got to get into this, guys. JP Morgan tells fintech firms to start paying for customer data. That sent the entire sector down in the early hours of the afternoon. Here's the headlines, essentially what's happening. The largest US bank has sent pricing sheets to data aggregators. The fees vary depending on how companies use the information, with higher levies tied to payment-focused companies, essentially. So what this means, guys, JP Morgan has a ton of information on client bank accounts, of course, because they're the largest bank, right? What does this give to payment firms or other firms such as Robinhood? It allows Robinhood to use different data aggregators who have the data on JP Morgan accounts as to the financial health of the person that is looking to either open an account with Robinhood, with PayPal, or other people of that nature when you are linking bank accounts, right? So it's kind of like a creditworthiness measure that a lot of companies use, such as companies like Affirm, companies like PayPal, companies like SOFI, companies like Robinhood. And so far, companies have been getting that for free. That may be coming to an end. The fees expected to take effect later this year, depending on the fate of a Biden-era regulation, which made these free pings, essentially, right, aren't final and could be negotiated. The charges would drastically reshape the business for fintech firms, which fundamentally rely on their access to customers' bank accounts. Payment platforms like PayPal Holdings, Venmo, cryptocurrency wallets such as Coinbase Global, and retail trading brokerages like Robinhood Markets all use this data so customers can send, receive, and trade money. Typically, the firms have been able to get it for free. JP Morgan's move comes as the fate of a controversial data sharing rule hangs in the balance. There was a Biden-era law that was doing this. The open banking measure, finalized in October, enables consumers to demand, download, and transfer their highly coveted data to another lender or financial services provider for free, right? So the one thing you have to keep in mind from this, guys, is some companies will be more affected than others, right? It stands to argue if the volume growth of customers for some of these fintech players is larger than the amount of new fees that they will have to pay, well, the amount of fees will be somewhat, right? It's going to be a moot point. Now, obviously, it's a bad headline for these companies, which is why they reacted so heavily to the downside overall. But you have to focus on customer growth. And for companies like Affirm, the customer growth is insanely large right now on a quarter-over-quarter basis. A lot of these companies, such as Affirm, such as Robinhood, such as SoFi, and otherwise, will be able to absorb the fees. PayPal's structure is a little bit different. They're not acquiring that many more clients right now, so maybe that will affect them a little bit more. But PayPal does have one thing in their favor, which is the fact that they're focused a lot on profitability right now. They have a lot of buybacks pending. They have very decent free cash flow yield. Yes, those fees might affect that, but even if they affect them by a little bit, right, it's going to take a lot to shave off that free cash flow yield. So I think it's a bit of an overreaction here. If I'm looking to play the dips on these on PayPal, I'll probably be looking to sell some put options below 70, call it 68 to 65, bit of a pullback. It's been long standing support for PayPal for the last few years. I wouldn't mind playing the volatility into the next few weeks. Affirm as well, the next support range that I'll be looking to maybe sell some options into is going to be 55 range, right? 57 down to about 51 is going to be that range. If we get a hardcore pullback, maybe I'll load up some more swing trade longs. You guys know that I have a leap call contract on Affirm that I started after their earnings because I loved their earnings and their guidance. If we pull back there, I might be adding to that trade, but I'll also be looking to play the wheel strategy on this one there. And for Square, sadly, Square is the company that I prefer the least in the payment space overall, but there could be an argument here for some swing trade longs out of support or some wheel trades if it's a company that you enjoy. 63 down to 53 is the support range, so keep all of that in mind when talking about the fintech players. American Airlines and some of the airlines is unfortunately coming back after yesterday's rallies. I'm not looking to play them, just full disclaimer overall, guys. I talked about that yesterday during Delta. Moving on to HIMS right now. So HIMS, unfortunately, reacting from the resistance highs, 55 down to 51. Not able to break through, guys. 2 attempts and now a bit of a rollover as the rotation from growth, or rather out of growth, continues at this current stage. So it was a nice attempt for a weekly uptrend. You got the unwind. You got the lower highs. Be very careful if they break this low here, 41.28 into the next few weeks of trade. That's going to be the weekly downtrend, and I would not be surprised if HIMS sadly goes all the way back down to 35. I would be a buyer of more positions on HIMS back there. I mean, of course, it would suck to give back the entire rally. I understand, right? But it is what it is. I'm just here to point out the support ranges, and where I will be more interested in playing the stock overall. That being said, we also have some declines on Elf Beauty that we got to talk about. No major news. We covered it earlier on in the week. No additional news. Here was one of, it was a very large player essentially selling out of some stock, 450,000 shares, if I recall correctly. So that was the negative news headline that started this sell-off. But keep in mind, guys, additionally, over the last quarter, how much has ELF been up, guys, right? 162%. So of course they're going to pull back eventually. Now, where could the pullback lead us into? Well, this area right here, 200-day EMA, 104. And then this entire region, 104 down to 88, is a pretty critical area of support for the stock. It's reacted there a bunch of times. And at this point in time, guys, you're literally just looking for a little bit of a weekly higher low. At that point, the bulls are working with a lot of space. So I will be looking to play the pullback on ELF here for some swing trade longs, but also to sell some puts below there because ELF has some pretty good volatility, all things considered. Those are just a few of the names to the downside that I wanted to cover today, but you could take a look here, guys. There's a lot of them that declined today, right? Nike, I'll be looking to play Nike on the pullbacks. Under 70 is an area I would not mind writing some options or maybe going for some swing trade longs. Shopify, we talk about this one sometimes. Lower 100s, if we get another further growth unwind, I'll be looking to play Shopify lower than 100 for some short put options overall. Those are just a few of the ones that I want to talk about. We talked about, a lot of the cybersecurity ones yesterday. So if you want to see those, just go check yesterday's video. I talked about them for like 5 minutes towards the end. To the upside here, guys, SMR, not too bad at all, right? Daily downtrend. Now the bulls getting a nice engulfing move. So this is usually how daily downtrends go. You get big legs, then you get a last small leg, then the bulls have a chance to engulf. So if you're looking at CoreWeave, if you're looking for Circle, if you're looking for other things, just look for the legs to get smaller and smaller. Wait for the bulls to show you where the bottom actually is, right? And then you can establish a stop loss area for a bit of a swing trade long. It's not looking too bad. I would like a bit of a daily uptrending structure to get the trend back officially, then set a stop down there, and then go for the weekly uptrend resumption, right? But SMR is not looking too bad. If we get further declines into next week, let's say the bears just engulf this move, I'll be looking to play a pullback maybe down here, lower 30s, right? 30 down to 28 bucks seems like a good area for me. ASTS, not providing that big of a pullback so far. Daily downtrend, the bulls, nice move today. We'll see if they can actually convert to a new daily uptrend, or if the bears just continue their slide. If they continue their slide, guys, we're probably going to be looking down here. There's some good volatility on this name, right? If you're looking to play some short puts on this one, selling options, you might want to do it down below there in the mid 30 range. MSTR is just following Bitcoin, so not too much to talk about there. If Bitcoin continues its rally, you can expect MSTR to continue as well. ANET's actually been a very big winner the last few weeks, right? Very nice breakout for ANET. No positions for me, but if you did build some positions on ANET down here, I also see no reason to sell. A position for me would be a back test of support, right? You get a bit of an unwind here, beautiful daily uptrend, beautiful weekly breakout. Any back test of this support range, talking about 102 to 95, and the EMAs, which will be curling up as well, that would probably be a nice breakout retest and long opportunity. So keep it on the watch list overall. That's pretty much everything I wanted to cover, guys. The rest of everything we've largely taken a look at already. So that's just the biggest gainers and losers of the day. I'll try to do that section as quick as possible, moving on in terms of the future videos. Now, in terms of our portfolio positions, let's have a rundown of the portfolio, shall we? So in terms of the portfolio positions here, guys, we're going to do a quick recap of what was closed. We did a nice amount of wheel trades this week, many of which I've already shown you guys. But suffice to say, a lot of these were in the top 5 options video and the bonus plays of last Sunday. You can see BITX, TEM I played, HIMS. Take a screenshot if you want. It'll give you a good idea where I want to play these, namely CoreWeave. CoreWeave was a nice stock for us to play and win this week. I have one more option into next week, which I'll show you in the near-term future. We took profits on the MSTR call debit spread, guys. Sadly, I missed the high of the morning. I was looking at something else. We closed it for a bit of profit. There's 1 week left on this contract. I close it, and then my members, after my alert, were able to get a much better price, which is always the point. If I can send the alert early, and then other people make more money than me. So you can see here, here's pretty much when I closed the option, and then it had a bit of a rally before kind of tapering back. So the contract overall, there was 1 week of time left. You may remember it. It was a lottery play that it took back in the day. Now we just got out of it. Maybe I'll play it again in the near-term future with a lot more time. But we just kind of had to get out because time was of the essence. And any pullback of Bitcoin throughout the weekend or into next week would just kill that contract. So I was happy taking a small win. Gold, I already told you guys about the trade on gold earlier on in the video. It was a swing trade that we were talking about on the channel. I took it last night. And then, of course, I tried to play FICO to the downside. But sadly, they stopped me out. FICO just did not want to hear anything about people trying to play this support range. And now, sadly, unfortunately, we were stopped out. It happens. It happens. Now a clear loss of support. So the next time that I'll play FICO is either one of two situations. Either you have to come down and pick me up in the 13 to 12s, or you got to give me the daily uptrend back. You have to reclaim the support range, right? Which is stops at about 1764, reclaim it, and then give me an entry down here. I'll put the stop loss down below there again, and then I'll try to play it to the upside, right? But as of right now, unfortunately, it's gone to the downside. Those are most of the trades. Well, actually, all the trades that I was able to close this week. What positions do I have into this week now? So let's take a look here at the positions list on the right-hand side. I still have all the same positions that you guys must remember, right? My 4 meme shares of Restoration Hardware. It's an anti-recession play. I'll hold it. Moving on, we got the Affirm call option. So you can see everything today in the portfolio was down because it was a big red day across the markets. We didn't lose too much. We were kind of in line with most of the markets there. So Affirm, still have the leap call options. I mentioned a few moments ago where I would be adding, again, in the 50s if we ever drop there. CoreWeave, I have a 110 short put option open for the next Friday session. We are currently underwater on that trade, but we have some very good distance between 110 and us. Now I have a new trade on CoreWeave, which is what I was talking about on the channel yesterday, a 120 strike for August 22nd. So there is still about 6 weeks of time on this contract. I got $22.70. Massive premium, I know, but I want to be a buyer of CoreWeave under $100. I'm not saying it's going to get there. I'm just saying that if I have a 120 strike and almost $23 of premium, my average cost, if assigned, will be $97. And that is where I'm willing to play the stock from. This is a high risk, high reward trade. High risk because the company is very volatile, high reward because of the sheer amount of premium that I got. And I don't usually take a greedy trade like that, but per week, this is about 3%. The math is as follows, right? 22.7 divided by your strike, which is 18.9% overall, divided by 6 weeks. And you can see we're currently at 3.1% per week. It is an aggressive trade. I'm not expecting people to replicate this. As a matter of fact, when I put this alert out, I said, you know what? For August 22nd, there's even premium down here at 95. You're talking about like $9 down here at 95. That's like 10% for 6 weeks, well above the 0.5% rule that we go for on a weekly basis. And that would give you a break even of roughly 85. I'm fine with a break even of 97. I will play covered calls in the event I get assigned there in the month of August. But if CoreWeave rallies or stays above 120, I'll be able to make a lot of premium on that trade. It's not a very large position for me, but I figured I should do it anyways. You rarely see me take these, ambitious or rather, slightly greedy wheel trades. But when I see an opportunity on a company that has a lot of volatility, sometimes I do take it. Not very often, but that's the trade. K-Web calls still have those. Rocket Mortgage, we opened another wheel trade today. We got the 13 puts for about 19 cents. Very nice entry. A bit of an aggressive entry on RKT, but I've been pulling up this chart for a while, right? I'm a big fan of playing this whole 13. One contract at 13 or however much your size is. A couple contracts here at 13. Then the next area for some more contracts would be down there at 12 to 11. I'll be looking to play that one on and off every single week. Thereafter, we still have the Rocket Mortgage calls, the May Leap call contracts. 260 is what we paid. We're still up on those, although they were slightly down today. TLT, I'll be looking to add to this TLT call sometime in the near-term future as we approach the tariffs in August, as we get more clarity on when the first rate cut is going to be. I'll probably take this one after the next Fed meeting at the end of the month, trying to average into TLT overall. These are for January 2027. Walmart, this is an option that I opened yesterday, 93 short put for about 51 cents. Now, we were actually profitable on this contract for a majority of the day, but it gave a bit of an uptick there at the end of the day here. You can see on the 5-minute candles, we got it yesterday at the high of the day. It went actually down to 30 cents. I could have closed it if I wanted to, but that's not the point, right? I don't mind being assigned Walmart shares here at $93. I'm a big fan of playing this pullback, and I would not mind playing the wheel in this very beautiful area of support. So that is the trade for Walmart. We'll see what happens by next Friday. It just counterbalances a lot of the tech stuff that I have in this portfolio overall. And then, of course, we have a bunch of the debit spreads, right? So a few of them are leaps, talking about Amazon. Leaps, December 2027, we're still up a lot on that contract. The Googles that I opened when the stock was around 163-ish, those are still up a decent amount of money overall, about 20%. And the Micron leap call debit spreads, which we got when Micron was like 70 bucks, right? We got those for December of 2027. Those are up about 150% overall. So we're doing very good on those. A ton of time. There's only about 900 days left on that contract, guys. Only about 900 days. I'll be looking to play Micron into the all-time highs. All the other ones are swing trades, many of which we've covered before. Adobe, looking for the stock to expand. So I'll go through them and I'll show you what you mean. Adobe, ASML call debit spread, October 850, 860. We're currently up a little bit on those. Berkshire, I'll be looking to maybe DCA into this contract. I'm still looking for a temporary local bottom. October 505, 510s. A lot of time. We're currently down on this contract, but I got a lot of time. CRM, we're also currently down on this contract, 290, 300 for October. Notice how much time I'm putting on these contracts because a lot of these names have been somewhat out of favor. Adobe, Berkshire, CRM, they've been out of favor. So I put a lot of time on them. ASML, I'm looking for a catch-up trade and looking to play this one for earnings as well. Pepsi, we've been in this one for a while. September contract, 140 to 145. We're roughly close to break even. PayPal, 77.5 to 82.5 for September. PayPal as well, right? And then Waste Management, 240 to 250, bull call debit spread, another value-oriented play. We're down on that contract as well, but not so much. So I'll go through them individually, right? So Adobe, essentially what I'm looking for here, guys, we're playing support. So although we're down, especially with a day like today or a week like this week, right? We're looking to use this area of support to get a rally from sometime now until October. That's why I have so much time on these contracts. ASML, I'm looking for an earnings rally into the mid 800s. That's why I'm playing this stock right here. I think it's been left behind from the whole semiconductor trade, and I'm looking for catch up. Notice I have 3 months of time on this one. CRM, same concept. We're looking to play support and a very crucial moving average, which is the 200. Very crucial area of support. We have a lot of price action there, guys, and the 200 weekly. It's been out of favor, right? Nothing but down since the 12th of May. The valuation is fairly decent, and I think they'll have good earnings. The valuation is very manageable. I'm giving myself until October for the bulls to figure it out here and put in a bit of a rally, right? So on a lot of these plays, I'm not playing weekly contracts. I'm not looking to day trade these. I'm just playing the weekly time frames, support areas, and looking for the bulls to take over because a lot of the analysis is done on the monthly timeframes as well, right? Just looking to tighten up on the monthlies and maybe go for that rally as the company has been left behind. What are the other ones? I forget. Oh, Berkshire, of course. Berkshire, fairly obvious what we're looking for here, guys. 10, 11 weeks of downside in a row. Of course, insurance been out of favor, especially property and casualty insurance. Berkshire has still been struggling with a lot of fees and costs that were associated to the California fires last year. Then, of course, being a property and insurance, was the largest property, insurance company in the United States in terms of Berkshire, right? The Texas floods and just overall bearishness on the insurance sector. Look at PGR. You notice on the monthly timeframes here, rolling over the monthly MACD on PGR. Insurance companies, guys, have had a fantastic last 2 years because they were able to increase their premiums so much with inflation. Now they don't have the same pricing power. So their premiums, the premiums, they jacked them up like this, and now they're only increasing them like this. So the revenue run rate as well went like this, and now it's tapering off. So now we're having a consolidation cycle. You see it on the 3-month chart for PGR. Look at Allstate. Allstate, same concept, right? Same concept. Brown Corporation, same concept. We were very extended on these insurance corporations, guys, and Berkshire is just being lumped up in there as well. So keep that in mind. It's not just Berkshire, it's everybody, but I enjoy playing this level. I'll be looking between the 470s, 460s. We're looking for a bottoming out of the stock in that time frame. Normally when Berkshire is down, let's just say, 10, 12, 13% from the highs, traditionally, in the context of a bull market, it's been a good buying opportunity. So we'll see how that one goes. And then two more ones that I had. PayPal, right? I already told you what I'd be looking to do, but PayPal, we opened it like here. You know what I mean? We opened it back then, around here, if I'm not mistaken, and we were looking for the expansion. We got the expansion. Sadly, now it's unraveled. So PayPal, we were actually up this entire time, and in one day, we're kind of back to break even. So unfortunately for PayPal, not the time for the stock just yet, but we're looking to play the monthlies, right? At some time from now to October, I want this stock relatively close to 80 to 82 bucks. I'm not asking for a lot, right? You saw the contract, only by September, and then waste management, right? So waste management, another play, a consumer defensive stock. We're looking to play this area of support accumulation zone. 4, 5, 6 weeks of downside in a row. Almost clipped into daily oversold conditions, was 4-hour oversold conditions. And now the bulls are looking to make a bit of a turn here as the daily momentum shifts from bear, maybe to bull. And we have support, and we have the 200 EMA. That is confluence. So I'll play these confluence plays. I'm looking for some expansion relatively back to where the all-time highs used to be. And I gave myself till October to do that. So that is the entire rundown of the portfolio. Hopefully it gives you an idea of how I do my swing trades, where I do my swing trades, and why. And in terms of the other account that I haven't brought up in a while, guys, maybe you forgot about the small long-term portfolio. The portfolio that we started back in March when nobody wanted to buy the tariff sell-off fears. And I was like, you know what? I have a very large long-term portfolio too, which I share to my Discord. Let's just call it its high 5 figures portfolio, right? So, but that's not the point, right? If I show you my big portfolio on the channel that I started back in 2017, 2018, what does that help? Sure, it shows you a very large account balance, and I can be like, hey guys, if you just keep investing, this is what's going to happen to you. But for everybody in my group and on YouTube that you guys do not have a long-term portfolio, I started this experiment. I started a second small long-term portfolio the 17th of March. I started it with $5,000. And as well, I put an additional $150 a week or $300 every 2 weeks. I do $300 every 2 weeks. This simulates what a lot of people can do with their average paychecks, which is what I did for a very long time and still do to this day, right? In my large portfolio. But now I'm doing it as well for my group and for you guys on YouTube as well. We've been adding, this is now week number 17 in terms of the buys. We are now up to a total contribution value of $7,300. Today I added a bit more to MasterCard, Booking.com, Amazon, Google, and Mercado Libre with my $300 deposit. As of the year-to-date performance, we are up 26%. Not too bad, beating the S&P 500 by a wide margin. You can argue that, well, it's just because you started this in the drawdown. Well, I started it when the S&P was drawed down as well, and we're beating that index by a lot. But just goes to show you, it's not a bad time to start portfolios when the market's drawing down. And if the markets would have kept drawing down all year, who cares? I'm buying into it with every single paycheck. I'd be very happy to accumulate during a year's worth of sell-off, because this portfolio is going to be held by myself for the next 10, 15, 20 years, right? You're investing for your future. All the companies that I have are here. Take a screenshot if you guys want. Sorry, I know it's a bit small, but the top companies, they're coded by cost basis right now. The top one is Amazon, followed by Google, Meta, Mercado Libre, Elf Beauty. The rest of the ones are fairly equally balanced here. AMD, AXP, TSM, Netflix, Microsoft, Booking.com, which is a new position for me, and MasterCard as well. So keep that in mind. A couple of these companies I won't hold for the very long term. This portfolio is like a 10, 15 year portfolio. AMD for me is like a 2-3 year thesis, right? I'll probably hold it for the next 2-3 years, but if it really comes into crazy valuations, maybe I swap this for something like a Costco, you know what I mean? Or something that is a more consistent, more predictable company. I'm not saying AMD cannot run for more than 2-3 years, but the quickest amount of gains may be had in the next 2-3 years, and then I may just trim and roll it into something that is a bit more consistent overall in terms of company structure. But so I digress. That's the markup of the portfolio. And just to reiterate, these were the buys that I made today. So that's everything I have for you guys for today. Hopefully you guys enjoyed today's video. A bit of a longer one because it's a Friday recap. We did a lot today. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new as well. We'd love to see you guys back here. And last but not least, if you have any questions, always feel free to leave them down below in the comment section. And if you wanted to join our investing and trading community, guys, the link is always down below in the video description. I talk about it so much every video, but I'll just kind of leave the link. Today, you get access to all my trades in real time, all the private morning live streams for about 3 hours. You can ask me all your questions, our chat rooms, our educational section, and access to all my charts and all my watch lists as well. The link is down below if you want to join. If not, have a great weekend, guys. Catch you soon. See you on Sunday. Peace.